What if I told you that silver breaking $50 wasn't just a price move? It was the crack in a dam that's been holding back 50 years of pressure, and what's about to happen next could either make you very wealthy or leave you watching from the sidelines in regret. Stay with me, because by the end of this video, you'll understand why $300 silver isn't a fantasy. It's a pattern that's played out twice before, and both times, the people who saw it coming changed their financial lives forever. Welcome to Con Invests. If you want real market analysis without the mainstream media fluff, hit that subscribe button right now. And drop silver to the moon in the comments so I know you're paying attention. Let's dive in. Here's something that's been bothering me for weeks. Silver just broke above $50 for the first time in 50 years. Think about that. Half a century. From 1980 to 2025, silver was trapped between $4 and $50. Every time it touched $50, it got slammed back down. 1980, rejected. 2011, rejected again. For 50 years, everyone accepted this as normal. Silver is just a $50 metal, they said. That's what they told your parents. That's what every TV analyst repeated your entire life. But here's what nobody told you. During those same 50 years, gold didn't stay trapped. Gold blew past its 1980 high. It crushed its 2011 high. Gold kept making new records decade after decade. Copper did the same thing. It sat between 50 cents and $1.50 for decades, then broke out in 2006 and shot to $4.50. Lead did it in 2007. Every major commodity that was compressed in a long range eventually broke through and repriced dramatically higher. For 50 years, silver was the only major commodity held below its historical range. Do you understand what that means? It means the pressure that built up inside this market over 5 decades is now releasing. And when 50 years of suppressed energy finally breaks free, it doesn't move 10%, it moves hundreds of percent. Let me show you something that changed my entire view on this trade. I studied every major silver surge in modern history, and I found a pattern so consistent it made me stop and just stare at the screen. 1979 to 1980, silver went from $12 to $50. It quadrupled in just 5 months. Not 5 years, 5 months. 2010 to 2011, silver went from $18 to almost $50, more than doubled in 7 months. Both surges happen fast. The explosive move, where the real money gets made, happens in months, not years. And both times there was a sharp correction in the middle that shook out everyone who wasn't paying attention. A scary, gut-wrenching pullback that made everyone say, "It's over, silver is done, I should have sold." And both times that pullback was the last chance to position before the final explosion. Now look at what just happened. Silver started accelerating in November 2025. By the end of January, it surged above $90. Then came the crash, a brutal day and a half collapse that took silver back down and made every holder sick to their stomach. Sound familiar? It should, because this is the same pattern. Month 1, Month 2, sharp correction to shake out weak hands. And if the pattern holds, which it has twice before with remarkable precision, the real move hasn't even started yet. The majority of gains happen in months 3 through 6. That puts us at early summer 2026. But here's where it gets insane. In 1980, silver quadrupled inside a $50 ceiling. The surge stayed within the old range. In 2011, same thing. Silver doubled, but hit that $50 wall again. This time, silver has already broken through the 50-year ceiling. The old reality is gone. And even after that brutal crash, silver didn't fall back below $50. It held above the old range. Do you see what this means? The floor of the new reality is the ceiling of the old one. Silver isn't going back to the old world. It's building a launch pad on top of it. Think of it like a dam. For 50 years, water has been building behind a concrete wall. Pressure increasing every year, every decade. Every attempt to breach the wall was pushed back. But the water never went away, it just kept building. Now for the first time, the wall is cracked. And the water isn't going to politely trickle through. It's going to blast through with 50 years of accumulated force behind it. That's what's happening to silver right now. The dam is cracked and nobody can put it back together. After the crash, I saw dozens of prominent voices announce they sold their entire silver position at $90. They pointed to their charts and said silver was overbought and due for a correction, and technically they were right. A correction did come. But here's the problem. They're using old tools to measure a new reality. It's like using a room thermometer to measure a volcano. The instrument wasn't built for this. RSI hitting 80 on a monthly chart used to mean overbought, when silver was trapped between $4 and $50. Those readings made sense then, but we're not in that range anymore. Silver has blown past the momentum levels that marked the 2011 high and the 2020 high. The old ceiling on momentum has been broken, just like the old ceiling on price. Anyone using old metrics to time their exit is going to miss the largest move of their lifetime. And here's the cruel part. Once they sell, the psychological barrier to buying back at a higher price is enormous. Most never will. They'll watch from the sidelines as silver does exactly what copper did after its multi-decade breakout. Now let me show you something nobody in mainstream media is talking about. I compared the Shanghai silver price to the New York price, and there's a $30 gap. Shanghai silver is trading $30 per ounce above the Western price. $30. That's not a rounding error. That's the physical market telling you the paper price is fiction. Go ahead, Google Shanghai Silver Premium right now. Look at the number yourself, because when you see it with your own eyes, it hits different. That gap is real, and it's widening. China implemented export controls on silver as of January 1st, 2026. Only 44 state-approved companies can export. 60 to 70% of global refined silver supply is now trapped inside Chinese borders. But it's not just China. Bullion dealers across North America are now telling clients they may receive $10 to $15 below spot price on physical deliveries. Dealers can't get enough physical silver to fulfill orders at market price. That's not a healthy market. That's a market where the price on your screen and the price in the real world are two completely different numbers. And every single time in history that physical premiums have widened like this, the paper price eventually catches up. Not the other way around. The paper price rises to meet physical reality. Silver rides on two waves, and both are hitting at the same time. Most people think silver is just an industrial metal, and they're half right. Wave 1. Industrial demand. Silver goes into solar panels, AI infrastructure, electronics, medical devices. China produces 80–90% of the world's solar cells, and silver is essential in every single one. The global supply deficit has run for 5 consecutive years. Demand has exceeded supply every year since 2021. And here's the thing. Once silver goes into a solar panel or circuit board, it's gone forever. The amounts are too small to recycle economically. Every ounce used industrially is permanently removed from supply. Wave 2. Monetary demand. Silver has been money for 3,000 years. And right now, something extraordinary is happening. India's Reserve Bank has issued regulations allowing silver to be used as formal bank collateral effective April 1st, 2026. That's the first monetization of silver by a major economy since the 1800s. 1.4 billion people are about to gain access to silver as a recognized monetary asset. This isn't speculation, this is regulatory fact. When silver acts only as an industrial metal, its price is driven by factories and supply chains. Predictable, manageable. But when silver acts as money, when 1.4 billion people start treating it as a store of value, the demand curve goes vertical. Gold has been riding this monetary wave for years. That's why gold keeps making new highs. But silver is gold's baby brother. For 3,000 years, silver has followed gold, just with a lag. And right now, the lag is the widest it's been in modern history. The gold to silver ratio is still near historically extreme levels. Every time this ratio has been this stretched, silver has violently repriced higher to close the gap. Not slowly, violently. Silver doesn't exist in a vacuum, and what I found in the broader financial landscape convinced me that $300 isn't just possible, it might be conservative. The US dollar index has broken below a structural support line that held for over a decade. The dollar isn't collapsing overnight, but it's in slow decay. M2 money supply data shows that every decade, the money supply increases by 80–90%. That's Federal Reserve data, not conspiracy. Every decade, they print 80–90% more dollars, which means the purchasing power of each dollar drops decade after decade. And precious metals are the mirror image of that decay. When the dollar weakens structurally, gold and silver don't just go up, they reprice to reflect the cumulative loss of purchasing power that was hidden during strong dollar periods. That repricing is happening right now. The government bond market is cracking. U.S. Treasury bond futures are trading around 115. If bonds drop about 3 more points into the 112 range, the holding pattern that has kept bond prices stable since 2022 breaks down. When the average citizen who used to feel safe putting money in government bonds starts to doubt that safety, that's a nuclear event for the financial system. Because if you can't trust government bonds, where do you put your money? For 3,000 years, the answer to that question has been gold and silver, and that answer is coming back. The commodity complex is breaking out. The Bloomberg Commodity Index has broken above a massive long-term momentum base. Crude oil just triggered a breakout. If crude goes from $60 to $90, that's a 50% jump in gasoline prices. When commodity prices surge, the average consumer gets squeezed. Cost of living goes up. Inflation expectations rise, and the monetary metals become the only logical shelter. Let me give you the number that made me take a deep breath. Gold made its cycle low in 2015 at roughly $1,050 per ounce. In previous bull markets, gold has made an 8-fold move from its cycle low to its peak. The 1980 peak was an 8-fold move. The 2011 peak was an 8-fold move. An 8-fold move from $1,050 puts gold at $8,400. JP Morgan just published a target of $8,500 for gold. The same number. When one of the largest banks in the world is publishing the same target the pattern produces independently, that's not coincidence. That's confirmation. And here's what that means for silver. If gold goes to $8,500 and the gold to silver ratio reverts even halfway toward its historical average, silver at $300 is not aggressive. It's the mathematical midpoint. Silver at $500 becomes the upper range of what a full normalization would look like. Let me paint you a picture based on the pattern. February is the stabilization month. Silver bounces, pulls back, bounces again. It feels frustrating, like nothing is happening. But underneath, the structure is rebuilding. By March, if the pattern holds, silver challenges its recent highs again. And that's when the game changes. The second time silver approaches a high after shaking out weak hands, there's no overhead resistance left. Everyone who was going to sell has already sold. The only people left are buyers. And that's when the acceleration kicks in. March through June, that's the window. That's where the 1979 pattern produced a 4 times move. That's where the 2010 pattern produced a 2.5 times move. And this time, the starting point is higher than it's ever been, above the 50-year ceiling with every macro indicator aligned, with physical premiums screaming that the real price is already much higher. 5 years from now, you're going to look back at this moment. You'll remember the crash from $90. You'll remember the doubt, the sick feeling, the headlines screaming that silver was done. And you'll either remember it as the moment you panicked and sold, or you'll remember it as the moment you looked at the data, saw the pattern, and made the decision that changed everything. Silver was trapped for 50 years. 50 years of compression, 50 years of being told it couldn't break $50. And it broke. It shattered that ceiling, and it hasn't gone back. Even after the worst crash in years, silver is still above the old range. The floor of the new reality is the ceiling of the old one. This isn't financial advice, this is pattern recognition. What you do with it is your decision. But the pattern is clear, the data is screaming, and the window is open. If this analysis helped you, smash that like button and subscribe to Con Invests. Drop silver to the moon in the comments, and I'll see you in the next one.